Out of bank audit series, we are entering into the second day. I welcome our speaker GK Raju sir, and also I pleased to introduce Mr. Raju. So he is a very good friend of mine. Mr. Raju is a practicing chartered accountant and he is a registered insolvency professional and registered valuer from Chennai. GKR is the tax assurance and restructuring partner of Mrs. K. Gopal Rao and Co. Chartered Accountant, having office at Mumbai, Bangalore, Hyderabad, Madurai, Tiruchirappalli, and Thiruvallur. GKR hails from the family of chartered accountant. His father, mother, younger brother, and wife all are practicing chartered accountant. GKR served consecutively 3 terms of 9 years from 2010 to 2019 as a Southern India Regional Council member of Institute of Chartered Accountants of India. GKR have been awarded honorary doctorate governance of GST in government sector by St. Mother Teresa University, Melbourne. Melbourne, Australia. GKR is the independent director data bank. Have qualified with the distinction the online proficiency self-assessment test conducted by the Institute of Corporate Affairs. GKR has BGP visiting faculty for Indian Institute of Management Raipur and GIP graduate insolvency program, visiting faculty for Indian Institute of Corporate Affairs, Ministry of Corporate Affairs, Government of India. GKR is qualified insolvency professional and as well as valuation professional, and also he is the member of cost accountant, associate member of company secretaries, twin postgraduate diploma holder in operation research and financial management from Pondicherry Central University. He is also holding MPhil and management from Tamil Nadu Open University. He is completing various certification course like information system audit, Indian accounting standard, and forensic accounting and fraud detection, international trade laws and world trade organization. Apart from he is nominated member from the Academic Board of University of Madras, Academic Board of Department of Commerce, Loyola College, Finance and Taxation Panel member, Chairman Valuation Standard Boards, All India Institute Registered Valuer Organization, Academic Council member of DG Vaishnava College, Academic Advisory Board, SDNP Vaishnava College for Women, Academic Board SIVT College Chennai, Board of Studies New College, Board of Studies Guru Nanak College, Audit Advisory Board of Director General of Audit Chennai, Executive Committee Central for Entrepreneurial Development Anna University, Steering Committee Institute of Directors Chennai. A passionate writer on technology and taxation in numerous journal and newspaper, columnist in daily Tamil Daily, the Hindu Tamil, the weekly Tamil magazine, Nanaya Vikidan, and Pudiya Talamurai Kalvi. Regularly appears interviewed in the numerous Tamil TV channels and FM radios, including DD Podigai, Jaya TV, News 18, Tamil Nadu, Kaveri News, FM Rainbow. Have been addressed more than 135 sessions and going on in Get Set Group program in Tamil FM 89.4, which is broadcasted in UAE and online. He is a versatile speaker, has addressed more than 600 meetings of income tax, GST, investor awareness program to various forums, including central and state government departmental professional bodies, Chamber of Commerce, Industry and Trade Association, both English and Tamil. With I think he is having a huge knowledge in all the subject. So in our circle, we named as an all-rounder. He is an all-rounder. Whatever the subject, whatever the act newly introduced, he is learned and passionate to teach others, members and the students. So with this few words, I welcome our today's speaker, GK Raju. Sir, floor is yours.
Oh, thank you very much. Secretary of SARC, CA AV Arun, and all the virtual members who are connected from various parts of southern region, and I also understand there are few members who have also connected from other parts of the country. So a very warm good evening to one and all. At the outset, let me thank SARC of ICI, especially the team led by the chairman and the secretary of Southern India Regional Council for organizing this 3-day special virtual program exclusively for bank audit And this year is going to be a very unique year in one aspect. The 1992 onwards, this concept of IRAC, income recognition and asset classification norms, which is in practice from 1992. So you can take it's a 30 year celebration we have completed as of last year. So this is 31st year. Now we are going to see a different generation. So one generation of looking backward and provisioning in books of accounts. So provisioning for loan for banks was a method which was recommended by the then committee. We call that committee as the Narasimhan Committee, where based on the behavior of the borrower when he defaults. So we had a concept of past due, now it is a overdue concept. So the overdue, once it crosses that 90-day generic period, the NPA, uh, it actually germinates, and the provisioning based on the timeline and standard SS and DL, we call it as SSS DL. So standard, substandard, doubtful, and loss assets. So this is the traditional method which we have been following for decades. And recently, on January 2023, 16th of January 2023, Reserve Bank of India has made an announcement, a press release, I can say. And in that press release, they are going to come out with a, a model called as ECL framework for provisioning of banks. So, which is going to be the future. And of course, the last date is over. 28th of February 2023 was the last date to get the feedback. And this month, they will bring out, Reserve Bank of India will bring out a guideline for implementation of ECL framework for provisioning for banks, and a 1 year time limit will be given to all the banks to implement this particular framework. So that means for the year 23-24, so for the year 22-23, this concept of IRAC norms which is been followed from 1992, and year on year which has been upgraded, that is applicable. But from the kind of next year onwards, the possibility of implementing ECL framework will be there. And maybe already there are many banks, they are already geared up. I want to make one observation here. So that already Ind AS is applicable for NBFCs, and ECL framework has been followed by NBFCs. NBFCs are being regulated by Reserve Bank of India. So therefore, the maturity of implementing this ECL framework by banks is only maybe a few months ahead, and already the IFRS 9 framework, that is Ind AS 109 framework, with respect to the ECL framework will be in vogue in a very short span of time. So with this background, I will start today's session. Maybe, yeah. So this is the para number 11.96, which I was referring to you. that in 1992 this concept of IRAC started, and the latest master circular which is applicable for this year 22-23, we have to refer to the April 1, 2022 master circular on prudential norms on income recognition, asset classification, and provisioning pertaining to advances. Now, even though there are the recent changes I'll be discussing with respect to the circulars and notifications, there are various aspects I want to bring it before all of you. So let me go one by one. So maybe you can note this. This particular booklet, which is published by Institute of Chartered Accountants every year. So there used to be a time when these books are available in green color, green and white color. And nowadays these books are not much available for sale because of the concept of online purchase of these books. So these books also will be available any point of time, because currently the exposure draft is there. That is more so sufficient for us to appreciate the major changes that has been brought out with respect to this. So let me now take you to some of the important changes here. So let me now take you to this page number 368, the para number 5.04. So here, let me start with point number 1 discussion. This is a cyber security framework that has been brought out by RBI through their circular dated 2nd of June 2016. So this is that circular 2nd of June 2016 on cyber security framework in banks. And I wish we at least have a go through at least some of the important aspects here, because in LFAR, so in long form audit report, we need to highlight some of these aspects. Very important aspects has to be highlighted. So especially with respect, I'll just share with you significant aspect to 3 or 4 aspects, not much. Almost a very big list is given here. I'll just share with you 2, 3. This is one point I want everybody's attention here. So the access to audit logs, trails maintained for capturing events like changes in master data, the changes in the parameters, activities carried out through admin login and admin privileges, especially whenever there is a requirement of a maker checker. So the admin can override. So the admin overrides also will be available as a log. So, and this can it be accessed through backend? So especially for a branch audit, these information will be available as a dump and will be available at the server level. And for every SAW, that is a service operation level, okay, the service operation line, whatever we call it, a SOL unit, okay, so every unit, these audit logs and audit trails will give us a lot of information, especially whether we need to do a sample. There are places where we need to select samples. There are places where we are not supposed to select samples. We have to do 100% verification, especially large advances, critical advances. So large and critical advances, no sampling, but retail advances. So there, the concept of 100% verification is not possible. So therefore, we have to go by some model. So which one I will select? Maybe where the master data are changed, parameters are changed. I'll come one by one. So even though the time is given to us, entire 3 hours is given to us by Secretary SARC, thank you very much. There are very many informations I want to discuss. Chair. Now let me now take you to the next important point for discussion. So which is the automation of, I repeat, the automation of IRAC norms. So this is page number 90 in para number 5.06 for your kind information. Now, all of you please pay your kind attention. With respect to this circular, September 14, 2020. Now, what is this circular? Friends, entire income recognition asset classification norms, which has been brought out year on year or periodically, which has been updated by Reserve Bank of India, gets updated in the system. So there were times when the manual system were there, then mechanization happened, then core banking came, then this asset classification was done as a separate system, and then it will be the NPA classification was done separately. Then they used to integrate with the main system. All this is gone. Now please look at this 14 September. It's a mandatory implementation by every bank in order to ensure completeness and integrity of the automated asset classification. So asset classification has been automated. Now once the asset classification is automated by fixing the parameters properly in the master data. So we call it as a master data parameter setting. Then the classification will be automatic. So standard assets, substandard assets, so the doubtful assets, so all these. So with respect to each and every type of advance, and whether it is a non-performing asset or NPA or NPI. NPI is non-performing investments. Maybe whenever the recovery is done in the form of investments. So investment should be performing. So for example, due to restructuring of certain advances, the loan will be converted to some instruments. Loan will be converted to preference shares. Loan is converted to some debentures. So then it should be it should be viable. So that investment should be worth. So otherwise it becomes a non-performing. So instead of having as a non-performing as a, what do you call it, as an asset, so an advance in the form of an NPA, it will be in the form of non-performing investments. So and their upgradation. So provisioning calculation, income recognition process. So from 14th of September, on automation of income recognition, has been advised to put in place or upgrade their systems backed asset classification on an ongoing exercise for both downgradation and upgradation of accounts. Now, downgradation and upgradation, wherever there is a, so upgradation, a doubtful asset because of its performance will be upgraded to a substandard asset, or a substandard assets because of the performance will be upgraded to a standard assets. So that is what I was referring to. So look back and then classify. So based on my performance, now this particular I was referring to the RBI's press release, which is dated the 16th of January 2023, and also the discussion paper. So this is that particular, I'll just share with you that particular, this is the discussion paper on introduction of expected credit loss framework for provisioning by banks. And this is the 30th September 2022 the RBI statement on developmental and regulation policy has been brought out. In that, the first paragraph itself, they mentioned that they are going to. So, the ECL regime, one of the major elements of the global response, this is actually a G20. The global response here refers to the G20 decision. G20 decision was taken in 2002 itself. I repeat, 2002 itself. And it is proposed to adopt expected credit loss approach for loss allowances. So after 30th September, now we have, yes, so this is the 16th January. The press release given by the RBI with respect to the issue of the discussion paper of expected credit loss. This is that 51-page document which I referred to. Right. So now I will now take you to the automation part of it, which is the page now, which is 4th September 2020. The 4th September 2020. So let me take you to that particular circular. So this is the 4th September 2020 with respect to automation of income recognition. This is that particular circular. So majority of the circulars are available at the RBI site itself, which has been referred in the exposure draft. So this is a 6-page document, and they have made it very clear-cut direction that with respect to classification, it has to be only automated process. So meaning the classification cannot be done by a separate system, which was done in the past, because they were all at the mechanization stage, so the development stage. So now all the banks have the infrastructure in place. So they cannot take an excuse saying that no, our systems is not robust, so we want to do the classification, the NPA classification separately. Then we will integrate with the main system. So that is not. So our job as a SBA, so a statutory branch auditor, our role is only to check whether manual intervention is there. So whether it is done mechanized, so that means 2 points we need to appreciate, guys. So one, whether the parameters have been set properly in the master data so that the asset classification is done properly. Second, whether any manual override is there. So we have to do a sampling only. So with respect to the master data parameter setting, so I'll just take you to one particular paragraph here. Yes. So the banks shall not resort to manual intervention. So this is the para taken from the 6-page circular. So manual intervention override in the system-based asset classification process. So we need to take the data dump maybe from the server, whether there are any manual intervention with respect to the parameter which has been set with respect to the income recognition and asset classification. And in any exceptional circumstances, so they don't say that no, it will not be there. For example, the upgradation. So downgradation from a standard asset to substandard, automatically it will fall down based on the past performance. From substandard, it will fall down to the doubtful asset. Doubtful asset will fall down to loss. Loss to, from loss, it has to be upgraded. Upgraded, can it upgrade 2-step or should it go only step by step? So these are all interesting factors. So we have the double promotion and all in school. So normal promotion is 5th standard means he will go to 6th standard. But what is double promotion? 5th will not go to 6th. 5th he will directly be promoted to 7th. Now similar to that, a doubtful asset, can they be promoted directly to not substandard? Can it be promoted to standard assets? So those are all exceptional circumstances where manual intervention is required to override the system classification Actually, we need to only upgrade step by step only. We cannot jump two step ahead. But manually, it can be done. So if it is done, the branch auditor may obtain the exceptional report. So these exceptional reports has to be pulled out from the system, and then the manual intervention where it is done. So which loan account it has been done. So which customer account it has been done. So customer number, loan number may not be same. So, and I will request to the participants to note down these points. Wherever you have the queries, you can please post your queries, and we have the SIRC official who will list out those questions during the Q&A session. So, I'll just share with you all the significant points for the time being. Okay, so where manual interventions in overriding. So that is with respect to this point. Now I'll now come to the another important paragraph. This is with respect to page number 417 as well as 411. So let me take you to that particular. Yes. So I'll now take you to the next part. So now all of you please pay your attention to this number. Yeah. Yeah. So this is our next master direction, which I'll be discussing. Yeah. So this is the master direction. I want everybody to pay your kind attention. So page number 411. This is with respect to the PSL targets and classifications. So the priority sector lending targets and classifications. Now, what is this? Now, again, here also there is a necessity for statutory branch auditor to actually verify with respect to the computation of ANBC, computation of CEOBE, and also whether the target has been which has been mentioned in this 4th September 2020, which has been updated on 20th October 2022. That is last year. These are all very important. So I'll just take you to the 4th September 2020, which is PSL. I'll just take it here. So this is 4th September. I already have certain things. So I don't want to waste your time. This is that. I already taken that. So this is that 42 page master direction on PSL targets and classifications. So here we actually have 9 priority sectors. For your kind information, guys, we have 9 priority sectors. So agriculture, MSME, export credit, education, housing, social infrastructure, renewable energy, and the socially weaker sections. And there is a categories also they have actually given how much has to be funded to them. The target and sub-targets for agriculture set under priority for all scheduled commercial bank operating in India are furnished below. For domestic scheduled commercial and foreign banks with 20 branches and above. So what is it? 40% of ANBC. So they are not supposed to, this is their target. So and sub-target for, so that means they have to fund 40% of ANBC to the total priority sector. And agriculture must be 18% of ANBC, and this is minimum, it's not maximum. And micro enterprises should be 7.5, not micro, small, and medium. Out of that, micro enterprises should be 7.5, and weaker sections. So economically weaker sections should be 12% and above. So these are all the targets that has been given. Now there will be a, you can ask for a printout of this. You can just so whenever we go as a team, So 4, 5, maybe 3 or 4 people when we go, you can pull out these datas. So especially what is the ANBC? So the adjusted net bank credit for that particular branch and with respect to that particular SOL, so service outlet. So what is the target that has been fixed and what is the funding that has been done, the advances that has been made for the priority sector, what is the percentage? So a sample can be taken. You can just make a small verification with respect to this. Then let me now take you to the next important aspect here, a very, very important point. All of you, please pay your kind attention to this paragraph, especially para number 417. Yeah. Here we have a very important circular. So this is the circular number 11th May 2012. Actually, this has been revised 2 times also in July 2018 and February 2019 also. So this is a credit card, the Kisan credit card. So Ulavargal credit card. Okay. So this credit card has to be issued to all the agriculturists. Now, there is a very important role for a statutory branch auditor here. So, not with respect to the funding part of it, but with respect to the interest subvention part. Okay, interest subvention. So, I'll just bring your kind attention to the page number. So, this is just to have an understanding. What is KCC? What is the limits given? Actually, we have a limit of this 1.6 lakhs, which is without any collateral. So we have a concept called without collateral, there will be a loan up to 1.6 lakhs has to be given. So you have a separate circular also for this. And I will now bring your attention to one important circular, that is with respect to the interest subvention. Now, this interest subvention, we need to give a certificate. I repeat, a certificate. Okay, so there are 4 certificates that has to be given, guys. So one is a 1.5% interest subvention, which is for short-term crop loan and post-harvest credit against negotiable warehouse receipt or loans restructured due to severe the various natural calamities. Okay, so that we have to give a certificate, and based on the certificate, the reimbursement will be received by the bank. So therefore, it is a receivable from the government of India. So this certificate is very, very critical, and especially there will be 4 certificates we have to give. That format has been given here at the end. So we have this. This is the format number 1. Yes. So this is that 1.5% interest subvention on short-term crop loan. So here, if you look at this particular part, the statutory auditor has to statutory auditor has to certify the correctness of the subvention claim. So there is a calculation, guys. So especially based on the circular 23rd November 2023, I mean 23rd November 2022, the mandate says that every Kisan who is getting this interest subvention, they should give their Aadhaar number. Okay, so Aadhaar number or at least Aadhaar enrollment number, because our country, we have 140 crore plus population, and out of that already 138 crore population have been enrolled for Aadhaar. So therefore, no, they don't have an Aadhaar is not an exception. Of course, an exception is there. That exception is only applicable for Assam, Meghalaya, Jammu and Kashmir and Ladakh. So, but we are from Tamil Nadu and maybe from South India. So, we may not come across this exceptions. Okay. So, where no Aadhaar is there. Okay. Because for sample verification, maybe if there are 230 Kisan farmers for whom this um, interest subvention is applicable. So, what is the loan amount up to 3 lakhs, number of accounts, what is the amount disbursed, what is the amount subvention claimed. Of course, this certificate may not give you the calculation. So, you have to go to the maybe the ledger and you have to take, they will do a separate calculation. So, and some of the systems are much advanced. So, those figures are already calculated and available in the system itself. So the only part we need to verify is whether the mandate has been filled up in the parameters, when it was filled up, and from when the interest subvention is actually applicable. And so please look at the certificate. We certify having disbursed the above loans at 7% per annum up to 3 lakhs by way of short term credit through Kisan to the farmers, and having calculated the interest subvention claim correctly and strictly. Please look at this. There are three places where the word certify will come. So we certify, we further certify. So one is correct calculation. Second, certification that Aadhaar number of all farmers for whom the interest subvention is being claimed has been captured. So sample you can take one or two, not necessarily 5, 10, 20 and all. Just sample maximum at least 3 you can take. Whether those uh, account holders they have Aadhaar and the Aadhaar document is there, and whether the Aadhaar has been verified or just somebody else Aadhaar has been given. So that verification also is mandatory. Another point, time of account opening. So whether the uh, Aadhaar was asked for or only for the interest subvention, the KYC document was taken. So all these we will come across. So when the concept of when we actually try to understand the implementation of this mandate given. Now there is yet another certificate. They say we certify that the above claim for interest subvention are rupees. So please look at this. We certify having disbursed the above loan at 7%, and this is the amount that is claimed. So three certification actually we are giving in one certificate. Calculated on eligible short-term credit to farmers through KCC disbursed during the period from what time to what date have been found true and correct and strictly in accordance with this 23rd November 2022 circular. So therefore, guys, so this 23rd November 2022 circular is a very important circular, and not only this. So this is for those borrowers. For them 1.5%, but there are regular borrowers. We call them as prompt borrowers. The prompt repayment borrowers, for them, the interest subvention is not 1.5, it is 2x, it is 2 times. So it is 3%. For them, it is 3%. So because they are prompt. So some incentive has to be given to them. So one-time claim of additional 3% subvention for prompt repayment. Okay, so that is also a separate. So it is not one certificate, guys. It is 4 certificate. So this is certificate 1 is 1.5%, certificate 2 is 3%, and there is another certificate is there that is also for Kisan, but it is for the next category. So that is they are farmers, not in land, but they are farmers of animal husbandry, dairy, beekeeping, fisheries, and of course natural calamities, loan restructuring. So all this will come. Now please look at this. This is annexure 3. So 1.5%. This is for such farmers. So not the land tilling and the agriculture farmers, but this is for animal husbandry, beekeeping, fisheries, etc. For them, it is not 3 lakhs, it is 2 lakhs. And again, you have one more certificate. This is for prompt. So, yeah, prompt. So this is prompt prepayment. So 3%. So please note down that there are 4 certificates, and for 4 means you need to take at least 4 samples to actually verify these inputs. So Aadhaar verification, calculation verification, and whether the disbursement was given from which date. So the disbursement would have been done during the year. So because this disbursement, special disbursement is only for the year 22-23, this certificate is also will extend for the next year also, 23-24. So therefore, it is a special certificate which has to be given for the current year. Good. Now, let me now take you to the next page number. So especially, I'll now take you to page number 490. Okay, so I just want to share with you, can the interest be charged at monthly interest? So I want to bring your attention to one circular here. Yes, this is that circular number, yeah, 19th of September 2020, 2002. So 19th of September 2002, this particular circular makes it very clear that normally interest charging is a monthly rest, normally. And for agriculture advance, has advised the banks that instruction regarding charging of interest on monthly rest shall not be applicable to agricultural advances, and banks shall continue to follow the existing practice of charging or compounding interest linked to crop seasons. For crop season wise only, the interest has to be charged. That is why you have short term crops and long term crops. Short term crops, it depends upon the Kharif and Rabi, and it will be the NPA also for short term means 2 crop seasons it should cross, and if it is a long term, it should be 1 crop season. So, what is a short term and what is a long term? There is a definition and examples are also there. So, please keep note of this, especially with respect to charging of interest. Maybe sample. Again, here also, you can take at least 4 or 5. At least 2 or 3, you can take sample of the agricultural advance with respect to short term crop advance and long term crop advance. So 3 plus 3, 6 you can take and calculate the interest, the basis at which the interests are calculated. Now, let me now take you to the page number, very important page. Let me take you to, guys. So this is the page number where the prudential norms on, yeah. So I think this particular aspect I have to mention to all of you. Yes, 424. Yes. Guys, I was referring to this part only. Yeah. So NPN agricultural advance. So a loan granted for short duration crops will be treated as an NPA if it is overdue for 2 crop seasons. And as far as the long duration crop is concerned, it is 1 crop season. Okay. Now, this is the very important circular as of now what we have. So for 2023, we don't have a IRAC prudential norms circular. This is the present circular that is currently applicable. So which is applicable for all. So let me just show you that 1st April. This is that 1st April, guys. So which is a 29 page circular. Look at this. This is the, sorry, this is co-acceptance, priority lending. This is I think we have come to this very important circular. This is that circular. So 77 page circular. Okay, so even though, of course, your booklet on ICA booklet on exposure draft booklet would have captured all these information in various places, but this 77 page document is your reference, the immediate reference for all types of the IRAC norms, as well as with respect to the asset classification and income recognition. Now, so let me now take you to one aspect here. Yes, I want to bring it to your kind attention to para number, especially. Yes, please look at this particular para number. Ah, point number 3. Of course, all these are taken only from your 77 page 1st April 2022 document. Okay, so as I told you, reading the entire 77 page is also equivalent to reading our, keeping this book next to you. So the best option is no need to wait for institute's book publication, because the exposure draft has to be approved and then only it will come as a book. And by the time the book is printed and available for sale, it will say, take some time. So better actually we make a printout of this entire booklet, but of course it will become very big. Make it as some 3 books on, because one is for the central statutory auditor part, another is for the statutory branch auditor part. So make it into some 2 parts so that easy for you to carry and refer. Maybe this month full you have, which will be a some 1,000 page printed material. So at least daily, if you read some 15-20 page, you will be in a position to complete it. And 90% of this information, of course, as a student of CA final, we would have read this. We would have read this. And every year, if we do one reading, maybe a month before the audit season, so we'll actually update ourselves with all the developments. So I'll just highlight some of the significant pointers from this 1st April 2022. So whenever there is a conversion or rescheduling, the term loan as well as fresh short-term loan may be treated as current dues and need not be classified as NPA. So up to 31st March 2023. So similarly for long duration crop and short duration crop, what is it we already knew. This 4th point is very, very critical. Okay, very, very critical. Gold loan granted for agricultural purpose. So please appreciate the difference between a gold loan for non-agri purpose, gold loan for agri purpose. If it is gold loan for agri purpose, interest is required to be charged as per Supreme Court judgment at yearly intervals. So not only, so you cannot do monthly. So it is only yearly intervals, and payment should coincide with the harvesting of crops. This is very sensitive. So better to actually uh, sorry. I think so, and accordingly, such advance will be treated as NPA only if installments of principal and or interest becomes overdue after the due date. So yearly once only, and if it is paid, very good. Otherwise, it has to be treated as an NPA. So sample you can take. Generally, the city-based branches, we will not have this, because all city-based branches or town-based branches may not have gold loans granted for agricultural purpose. Good. So now let me now take you to the next important aspect. This is page number. I'll take you to 429. I think this part I have already discussed during my discussion. So this is 429. Collateral free agricultural. I was referring this at the previous discussion when I was doing. So this is the um, circular number. So 18th June 2010, where credit flow to agriculture loans, okay, and waiver of margin or security requirement. Very important. Okay. Now I'll just share with you. I think I have that with me. I'll just show you that ad hoc. Master guarantee, utilities, opening of automated recognition, automation, submission. I think ad hoc. One more. No. So maybe I'll just take that part alone. So this is 18th June 2010. Okay, 18th June 2010. I'll just take this. So this is with respect to the credit flow. Actually, a very important credit flow. So this is that particular notification. So have a look at this. It's a very small circular, very effective circular. So what is this? So they have kept this. It is interest. There is no collateral. Okay, interest will be charged, but no collateral. So keeping in view the overall inflation and rise in agricultural input costs over the years, it has been designed to raise the limit of collateral-free agricultural loan from the existing limit of 1 lakh to 1.6 lakhs. So banks can waive margin requirements for agricultural loan. Now I want to make one observation here. So there is a concept called write-off and waiver. So waiver is only based on certain schemes. So we that we very concept. And also when we discuss with when as a bankers also they should be very clear that write-off is the writing off is only in books of accounts, but the right to recover is with the banker. Waiver is a benefit given to the borrower, and even if there is a collateral, that collateral has to be given back. So that means it has to be surrendered back to the borrower. So there is a fundamental difference we need to be very clear with because here and there the concept of waiver will come. So you have to be very careful. So this terminology of waiver is only with respect to margin requirement and security requirement. Okay. So not with respect to the waiver of loan. Okay. Now there are one more aspect I want to share with you, because immediately after that the concept of debt relief and waiver is coming. So you need to be clear with this distinction. Okay. So let us not confuse that waiver with this waiver. So that is a waiver with respect to margin requirement and security requirement. But here there are various state and central government debt relief schemes. So only based on that the loan itself will be waived and it will be removed from the books of accounts. So removed from the books of accounts. So therefore it will be not debited to P&L account, but based on the scheme, the bank has to receive that money from the government. Only it is actually transferred to government and government has to pay. So instead of the farmer or whomsoever are paying. So I just want to share with you one or two interesting statistics with respect to that, because this concept of agricultural debt waiver schemes came only, the first scheme came in 1990. So at that time, the then Prime Minister VP Singh announced a 10,000 crore, okay, nationwide farm loan waiver. So the second came in 2008. It was an agricultural debt waiver and debt relief scheme, almost the same name. It was the then Finance Minister, so P. Chidambaram. So Sri P. Chidambaram was there, and it was a 60,000 crore waiver. It was a 60,000 crore waiver. And in 2014, Telangana and Andhra Pradesh, so that state government has announced for a 17,000 crore waiver. And in Tamil Nadu, so Edapadi Painisamy regime, so there was an announcement, and gold loan pertaining to agriculture and agricultural advances, there was a waiver that was announced just 2 years back. So just want to give you an update on that particular agricultural debt relief and waiver schemes. So in such cases, based on the scheme, the accounting entry will be, instead of the agriculturist, it will be the respective state government or central government from whom the money has to be received. So this is the point I want to bring it to your attention. Now, let me now take you to the next aspect. So this is page number 400 and yes, I want to bring to your attention one very, very important aspect before, because these certification I already discussed. I'm now taking you to the page number 443. Yeah, so this is the paragraph I want everybody's attention, guys. Page number 443. So para number 11.04. So here, so before I take you into the various advances and with respect to the various provisioning aspect and income recognition and asset classification aspect, please look at this. Every bank has its credit policy approved by its board of directors. Okay, so at branch level, maybe if you ask this question, they will have a, oh, what is this you are asking? I don't know. We don't, I have not seen a credit policy at all, because for them, product alone will come, product details, the conditions and documentation limits, that alone will be mentioned. But those products are based on the credit policy. And I want to make one observation here that your credit policy is the criteria based on which your the new Reserve Bank of India's press release, that is the ECL framework for provisioning of banks, has a direct nexus with the credit policy. So therefore, understanding the credit policy. Now, I want to bring your attention to this paragraph. Look at this paragraph. The branch auditors should acquaint themselves with the credit policy of the bank and advances portfolio composition. Okay, so what is the, so whether it is agri advance, non-agri, so retail loans or large advances, what is the housing loan component, what is the priority sector lending. So this is called the advance portfolio composition. So the branch auditor should acquaint themselves with the credit policy. So maybe if a branch manager doesn't know, he should know that. He will be knowing it. But maybe if he doesn't have a policy document copy, you have to ask for it and let him get a copy document, and board approved credit policy document from the headquarters for you to have an understanding about the credit policy and how it is connected with the various aspects. Now, uh, this is a very, very important point I want to bring to your attention. So, statutory branch auditors have to keep this in mind, that you have to select samples. Okay, a comprehensive coverage of advances. Okay, and there are certain type of advances where sample is not advisable. You have to take 100%. So that is the top large exposure accounts. Okay, so sometimes maybe you can even take 50%, 60%, 75%, even if you can't do the 100% verification, you can go by. So sample is not the criteria there. Here, almost all accounts. Maybe it will only have, maybe if you have top 20 accounts, you can try to have all 20 accounts also. Okay, so if time permits to you. And they are giving a criteria. Okay, so what is that criteria? So the LFAR guidelines, large advances are those where the outstanding amount is 10%. Okay, in respect of the outstanding amount is in excess of 10% of the aggregate outstanding balance of fund and non-fund of the branch, or 10 crore, whichever is less. Okay, so that is, so maybe even if you take 3, 4, 5, you have covered 20-30% of the entire bank's advance. So that is what it says. And get the list of stressed accounts. And from that, you want to make a, so SBA should test the SMA list. Please look at this. Okay. for completeness and accuracy. So all these, I don't want to spend time. I'm sure you can actually have a look at it. Okay, I'll just share with you one or two important aspects. Look at this. Obtain the list of unsecured exposures above 1 crore. Now, these things, if you ask, it may not be there. They will say, no, no, sir, abdilla, onnu illa, no, nothing is like this, sir. So, try to actually put a query and then pull out from the system. So, number of accounts will be hundreds and thousands. So therefore, the best thing is put the parameters and then pull out. Okay. And then you try to fix the parameters and the aspects to check the various things. Now, there is one more aspect which our guidance note mandates. Okay. That is examination of loan documents. Please look at this. Okay. So this has been mandated. Okay. And I just want to share with you that auditor should evaluate the adequacy of loan documents. Okay. So please look at this. So it can be many things. So if it is a company, right from the incorporation documents. So I just want to share with you even the uh, loan, the advance related documents, like for example, immovable property documents, the advocate, the legal opinion, the valuation report. Okay, the valuation report has to be obtained once in every 3 years. So that is what the criteria says. The insurance for that. So all these will form part of this. Now let me now take you to another very important aspect, which is page number 453, which is with respect to, okay, yeah. So I'll now take you to this page number 400 and, yeah. So I want your complete attention, this part. Okay, look at this. Yes. So security. What is security? So security can be tangible and intangible. I repeat, tangible as well as intangible. Now, the moment you say tangible, all your stock, your immovable property. So, movable, tangible, immovable, tangible. But there will be intangibles also can be a security. Okay, so what can be? Guarantees, comfort letters, okay, rights, licenses, authorization, which are charged to bank as collateral. Very important. Okay, so now there is a very important what do you call it, as a circular, which is dated 30th of August 2021. This is a master direction with respect to financial statements presentation and disclosure. Now here they have made that so therefore we need to actually find out whether any such advances are backed by these kind of intangible securities. Okay, so rights, licenses, authorization should not be reckoned as tangible security. So what are all the advances backed by tangible security? What are the advances backed by intangible securities? Now, sometimes intangible security they'll say nil. They'll say only tangible securities. So take some samples. So what are the so then the classification is wrong. So then the classification, the moment classification is in terms of, for example, guarantees, comfort letters. So who has given? So what is the whether government has given a guarantee, whether a bank has given a guarantee, whether an individual has given a guarantee or a corporate guarantee, whether it is a financial guarantee, whether it is a performance guarantee. So let me now take you to one very important circular in this aspect. It is a 1st April 2022 circular. This is with respect to the guarantees. All of you please pay attention. Yes. Where is it? Guarantees and co-acceptance. This is your 1st April 2022. So I'll just take you to the page number 470. Yes. Yes. Yes, please. Ah, this is even though, look at this. Yes, non-fund based facilities. Okay. Now, the auditor should ensure, please look at all these 12 points are actually pulled out from this. It has been pulled out from. Sorry, where is it? Guarantees. It has been pulled out from this 1st April 2022 circular. So here my power is gone. So anyhow, I'll just switch off my video. I think the power is back. Thank you. Yes. So this 29-page document is a very important document by Reserve Bank of India, which was given on 1st of April, issued on 1st of April 2022. Now here, I'll just take to you some of the important pointers alone from a statutory branch auditor's perspective. Please look at this. Now look at this first point here. As a general rule, bank guarantee should not have maturity of more than 10 years long. So it cannot have. And of course, this is not an absolute one, and guarantee can be issued beyond 10 years also, subject to the bank policy with the prior approval of the board of directors. So therefore, maybe if it is a long-term project and all. So generally, it is should not be given. So that is what that particular 1st April 2022 circular speaks about. Okay. Now, I'll also take you to one few more. There are 12 points. The auditor should also ensure the classification of guarantee into performance guarantee or financial guarantee, as they carry separate risk weight, that is with respect to the capital adequacy calculation. Basel 3 requirement, capital adequacy, whenever it is guarantee based, performance guarantee based, the weightage will be different. Financial guarantee weightage is different because risk is more. So performance guarantee, it only if he fails, the performance wise he fails, then there will be an invocation of that guarantee, and sometimes possibility that even though he fails, there will be a possibility that somebody else may replace it. So therefore, the weightage varies with respect to these two. So it is the responsibility of the auditor to actually check the proper classification. And I'll also take you to another few pointers. Of course, all these points are very important. Maybe I'll just quickly go through 3-4 points. Okay. Now let me go to the Let me go to the second point. There is a proper procedure for sanctioning non-fund based facilities, and these facilities are duly monitored and are within the sanctioned limit. Any outstanding beyond the sanctioned amount is a deviation and should be promptly reported. So banks do not issue these facilities, especially guarantees for walk-in customer, even with 100% cash margin. So that means new, okay, new customer. So necessary KYC checks and a due sanction should be in place for issuance. So you can pull out some data. So how many guarantees were issued last year, and how many guarantees continue last year till current year. So what was your opening balance of guarantee? Which guarantee closed during the year? And which guarantee was open during the year? Opened guarantee, what is the closing balance? Opening balance guarantee, which is the closing balance? All these you can actually pull out. Okay, you can have a classification. And to these guarantees were given to which customers? Okay, and which loan account and which customers? So which is the customer ID? And sometimes you will come across one customer ID to 7, 10 or 70 loan accounts, guarantees would have been given. So maximum. And who are all the new customers, who are all the existing customers. All this can be pulled out. So just with matter of seconds, matter of minutes, all these informations will be available with you. So this is what, so the checking and verification with respect to non-fund based facilities are quite large. I'll also share with you at least another 3, 4. Okay. Please look at item number 5. They have been issued in the prescribed standard format. So this is there as part of the bank's policy, and care should be taken to note the formats of issuance of the letter of comfort or letter of undertaking, whether the format has been changed, and that is why even the stationery for issuance of guarantee, there will be a standard stationery, and all this stuff will be already pre processed one. So therefore, the moment otherwise the wordings will be added, some wordings will be deleted. So all these will be there. So therefore, they need to only fill up certain information like the name of the party, from what date to what date, the amount, the contract or the contrary, to whom the guarantee is given. Some standard filling informations only should be there. So that you can verify with sample 1 or 2. Okay, good. Then let me now take you to the next aspect for your consortium. Consortium. Now let me take with respect to page number 461. So I think we have come 5-6 pages. So let me take you to 461. This part. So lending under consortium arrangement and multiple banking arrangement. My goodness. Now, what is this part? Okay. So here there is a important 10th February 2009. Okay. So there is one RBI circular. What is this? Lending under consortium arrangement, multiple banking arrangement. So there is a master circular on 1st July 2005 with respect to statutory and other restriction. Now, what is that? So I want to bring to your attention this part. So especially in a consortium or multiple banking arrangement, the lead banker, okay, and will decide. Now, you have multiple banks, but the borrowings is taken, the borrower is one person, but the lender are more than one. Now, lead bank, I will be giving my compliance with respect to that particular bank, I will be giving. But how about the others? Whether they will know. So, in order to strengthen the information sharing system among banks, enjoying credit facilities from multiple banks, banks are required to obtain regular certification by a professional. So this is one place where they have brought all the 3 professionals. Okay, because this is compliance part. So that can even be a company secretary or a cost accountant or a chartered accountant regarding compliance of various statutory prescriptions that are invoked. So this can be taken. Okay. So, and whether if I am not the lead bank, I am only one of the consortium bank. Okay, part of that consortium. So whether, because nothing will be there, no file, whether they are complying anything, you ask, sir, lead bank will take care. Sir, lead bank will take care. Sir, lead bank. Nothing will be there in my file. So that is why this circular is a very important circular. Okay. No. How can you say that? You get obtained regular certification from a professional. You believe a professional. So, and there is a format also for that. As per specimen given in Annex 3, Part 1 and 2 RBI circular. So you have the format. Okay. So therefore, these are all some interesting, I will say procedures that is already available. So only thing is we need to ensure that the banks follow these procedures. Now, I'll now take you to another important paragraph, page 463. Now, please look at this page. So, this is the audit approach procedures for regulatory consideration. Now here, look at this. SBA should review circular policy related to every loan product under the audit. Also review the circular is in line with the RBI guidelines. So very important. I'll just share with you some of the important aspects here. Okay. Of course, a very big list. Okay. So very big list. So especially this 3rd March 2016. Okay. So the retail advance, the volume of transactions are high. So hence the auditor needs to apply effective sampling to ensure proper coverage. Okay, this part already I have mentioned. Now, while selecting sample, the auditor may consider what is the loan sanctioned, what is the loan disbursed, near to reporting date, high low interest rate sanction as compared to the average rate, the range, coverage of different branches, different types of loan. All this should be there. So in your, even though you take a sample, the sample should be representative of the population. So that is what they mentioned here. Now, SBA should also look into the following documents for checking bank process for selected sample accounts. My God, it's very big. Okay. So property valuation, for so many things. I'll just take to you some of the recent aspects. Okay. Okay, recent one I'll take. So let me now take you to 464. Yes, 464. I'll not take you to this recent 23rd, sorry, 21st April 2022. Okay, legal entity identifier for borrowers. Oh, actually, this 22-23 is the first year of I mean say implementation. So I'll just share with you that circular. Please look at this circular. I don't know how many bankers are aware about it, but this is LEI. This is the legal entity identifiers for borrowers. Okay, now like you have this PAN, DIN, SIN. Okay, so like that, any borrower, there will be a separate unique number will be given. So legal entity identifier for borrowers. So LEI, okay, has to be. And this guideline on LEI extended to primary urban cooperative banks, NBFCs also. Actually, the original thing is, this is the original introduction of LEI for large corporate borrowers. So that is the recent one. Now I'll just share with you this. This is the original one, 2017. Okay, introduction of LEI for large corporate borrowers, because those who are 5 crore and above. Okay, so look at this. So this is an LEI is a number. Okay, they should. It is a global legal entity identifier foundation. Now, why all these things are happening? The moment somebody is see today as Ramesh, I will borrow, and I may become NPA. Then next again I will become another Ramesh, and I will go and borrow in some other name. So I will just change the name, but the legal entity identifier will be connected to so many parameters of me. So that is why this is very important. The entity tasked to support the implementation is the legal entity identifier India Limited, a separate subsidiary of Clearing Corporation. Okay, so this is a mandatory one, but of course, this part I just want to share with you. Legal entity identifier. Here it is. Oh, guarantee. Is it? Yes. This is the one. Of course, for these two, especially for urban cooperative banks and NBFCs, they are given a time limit. So up to 23rd of up to 30th April 2023, about 25 crores. So 10 to 25 crores for 2024, and 5 crore to 10 crore it is 2025. So for banks, it has already started in 2017 itself. Okay, so that is for your kind information. So you can take a sample. So whether how many people are above 5 crores and whether a legal entity identifier number has been obtained. So what is that number? So from the system, everything will be available just like that. Okay. Now let me also take you to this part. So this is a very important circular that was brought out on 19th of April 2022. Now what is this 19th of April 2022? This is a consolidated circular on opening of current account CC and OD by banks. I'll just give, I'm sure all of you are aware about this circular that if already a person is having a CC or OD in a bank, okay, so let us say Bank of Baroda, can he open a current account in Bank of Maharashtra? Can you open a current account in Bank of India? So is it possible? No, it is not possible unless another there is a permission given by the other bank. So that is a consolidated circular. It's a very, very important circular. So they are not supposed to open actually. So they have to only and 1 minute. If they already have a current account, they have to only use the. This is the consolidated circular, 9-page circular. So, what is the opening of bank account for borrowers availing CC? So not availing CC. So then they have to give a declaration. So all this stuff. So it's a very, very important. And this came in 19th of April 2022. So now you have to ask whether this particular circular has been complied with respect to opening of current account, CC and OD account. So during the year 22-23, after 19th of April 22, how many accounts are opened? Pull out the list. And you can check some of their account opening form documents and whether they have taken the declaration, whether they have verified with respect to their PAN and Aadhaar, whether they have some other account in any other bank. So what is that? So whether they have an exposure, what is their CIBIL rating? So all these they should actually take. So it's a very, very important circular, and that also has to be brought out. And all these, wherever there is a deviation, so we have to report it in LFAR. Okay, so bank guarantee I have discussed. Let me now take you to the LFAR component. So I think we already have this page now. Yes, this one. Yes. So the auditor has to review on a test check basis whether the data keyed into the system is correct. So that's all. Okay. So LFAR specifies the format. The auditor has to obtain data from the branch for large advances. So these informations will be given with respect to large, irregular and critical advance accounts. So just to make a sample check, especially with respect to the limit, collateral security, margin, because all this information they will not take from file. They will take from the master data. It is already there. Tuck, 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 control C, and then put take a printout, control P, over. So we need to verify not with respect to data, but with respect to the respective file and also the supporting documents. So sample. So this is a responsibility of the statutory branch auditor. So that is one more aspect. So now let me now take you to the, yeah. So this part I have discussed. I'll now take you to, look at this. This is given in bold color, bold. Okay. Regulatory guidelines vis-a-vis audit approach and reporting. Now look at this A. Has the branch identified and classified advances into SSL DL, okay, through the computer system without manual intervention in lines with the norms prescribed by Reserve Bank of India? I have already given you the respective automation of IRAC provisioning, which is 14 September 2020. Okay, circular. So in line with the norms prescribed by the Reserve Bank of India, the auditor may refer to the relevant HO instructions for identification of NPAs and classification of advances, which is in line with the RBI circular only. Okay. So whether it is HO instruction, it cannot be a new instruction. It should be in line with the RBI circular. So RBI circular is your foundation. Your master direction, your RBI circular is your foundation. So an auditor needs to review and comment as to whether such identification was through the computer system without manual intervention, and whether manual intervention is there, please take the exception report, and exception report item by item kindly find out why that overriding was done, what is the reason, whether we call it as the change management process, change management procedures, whether any change management process document was there, who authorized it to do that, why they did it, all should be there. Okay, so and that is very important, and it is better to bring it to the attention of the central statutory auditors also. See, for your information, these are very, very significant from a central statutory auditor's perspective also, because at the branch level, it has been verified, and it has been, the branch auditors are giving comfort through their actually their report to the central auditors. So therefore, any exceptions, so generally if everything is okay, if it is put in LFAR, then it will not go to the attention of central auditors, because hundreds of branches, thousands of branches are there. But you put the exceptions, you put from the exception report, you find an exception, and that you bring it to the attention of the central auditors, then that will be taken. Then whether the internal control is commensurate to the size, all this the central auditors has to comment. So at the end of the day, the balance sheet that is published for the public, it is only the central auditor's report. So therefore, for central auditor to comment, the branch auditor's observation is very critical, and branch auditor's observation is one put is final. Even the central auditor will not speak to the branch auditor and say, no, why you are putting this, you remove all this nonsense, will never happen. So that is sacrosanct. That process is sacrosanct. Very, very important process, guys. So therefore, let us understand that. And I want to bring to your kind attention this part. Yes. So now let me take you to the next very important one. Yes. So all this, I'm sure we are aware about it. The 90-day, 80-day and all, we know. 484. So I don't want to bore your time with what is term loan 90 days, cash credit, bill purchase, securitization 90 days, agricultural advances, crop season, credit card is also 90 days. Okay. So all these are taken from. Okay. So now I'll take you to one very, very important circular. Very important circular. Okay. So what is that? This is not an RBI circular, but this is a IBA circular. Oh, temporary deficiencies. So I'm bringing to your attention one very important aspect. Okay. See, this classification of an asset as NPA is based on the record of recovery. Okay. Bank should not classify an advance account as NPA merely due to existence of some deficiencies which are temporary in nature, such as non-availability of adequate drawing power based on the latest available stock statement. Okay, this is a very, very important statement, guys. Please pay attention. Okay. Bank should not classify an advance as NPA merely due to some deficiencies. So what is it? Drawing power is not there because stock statement is not given. Because old stock statement. Normally stock statement means latest 3 months stock statement only should be taken. All this. Now, I'm going to bring to your attention one very important circular. This is that circular. Yes. Where is it? This is the IBA circular. Indian Banks Association, Corporate and International Banking. This is to all the chief executives of all the banks. Calculation of drawing power in consortium accounts, including the CDR and bilaterally restructured accounts. This is actually a 3-page document only. This is 3-page. The DP in case of consortium account will be calculated like the total value of stocks, excess, less. So this is that formula that has been given. So now I'm not going to discuss about this. I'll only take you to the summary Okay, summary alone. So please pay attention. Please pay attention. Now here, look at this. This is the bar. So the auditor should review the bank's policy for treatment of creditors' balance for computation of DP. You can take sample alone. So drawing power, you can take sample, maybe 5 or 10 accounts alone you can take. The auditor should factor each of this consideration in the drawing power. So this is that IBA circular which I showed you. If the bank is having a policy of considering trade creditors to the extent of the excess over the level of trade creditor assumed at the time of assessment, auditor will reciprocally review and verify the level of stock and book debts assumed at the time of assessment. Please watch this para. If the bank is having a policy of considering trade creditors to the extent of excess over the level of trade creditors assumed at the time of assessment, the auditor will reciprocally review and verify the level of stock and book debts assumed at the time of assessment so that the reconciliation will happen. Further, the auditor will refer and review the methodology adopted for the maximum permissible bank finance. So further, paid stock denotes the value of stock as reduced by the trade creditors at gross level. So stock minus trade creditor, that is paid stock by default. However, considering difficulties a large borrower, stock statement relied upon by the banks should not be older than 3 months. And all these are taken only from that. So in case of consortium accounts, the drawing power calculation allocation is made by the lead bank and is binding on the member bank, matter over. So that's all. So that means the other banks, once the lead bank gives the number, other member banks, they have to actually follow. This is this is not an RBI circular, guys. This is an IBA circular. Okay. So therefore, the message, the email, the correspondence from the lead bank, and that correspondence should not be an old one. It should be the latest one. Okay. So drawing power, whether as per the consortium agreement, whether this information will be shared monthly or quarterly, and if it is quarterly, whether the drawing power should be applied till which month. All these are very critical. So if there is any deviation, it has to be brought in the audit report. Okay, good. Good. Now, of course, LFAR you can bring it, and you can also bring that in your right. Now, I'll now bring to this is another important yes, circular. Very important circular, guys. Yes. So which is the circular? This circular is ad hoc. Okay. This is with respect to ad hoc. Advances guaranteed. Ad hoc. This is page number 486. Yes. Now please look at this, guys. Now I'll just take to you this 21st August 2020 RBI circular. 21st August. This is that one. I think I'll delete this. This is the 21st August 2020. Look at this, guys. Ad hoc short review renewal of credit facilities. Oh. Now ad hoc. So during the year 22-23, how much ad hoc advance have been given? Okay, immediately list will come. Okay, now what is the mechanism here? So the regular and ad hoc credit limits need to be reviewed, regularized, not later than 3 months. Okay, now where it is given? In the circular. So that means if an ad hoc limit is given, it should be closed within 3 months or regularized within 3 months. That means you add it to the original limit. So you increase that particular limit. In case of constraints that is non-available to financial statement or data, the branch should furnish evidence to show that the renewal of credit limit is underway and would be completed soon. Very good. Oh, sir, 31st March, we are so pressure, we are doing it. See, a mail has been sent, it will come, we are doing it. So, in any case, delay beyond 6 months is not considerable, desirable as a general discipline. So, ad hoc. Okay. Hence, an account where the irregular or ad hoc credit limits has not been reviewed or renewed within 180 days from the due date of the ad hoc sanction. Please, not from the ad hoc, from the due date or date of ad hoc sanction will be treated as NPA. Look at this. So, this is a very important circular. So, therefore, ad hoc, we have a separate circular. Okay. So, similarly, to be pertinent, know that counting 180 days would be required to be done from the date of original due date for renewal, especially renewal also not done. So, normally renewal means at the time of renewal, so much of verification will be done, and with respect to the drawing power limits, with respect to the financial strength, everything will be reviewed, and it will be directed that you rectify it. And if it is not renewed, please look at this. 180 days from not renewal also will be treated as NPA. It would pertinent the count amount would be required to be done from the original date of renewal, not from the date of expiry of the short review. So, original date of renewal. So, all these are given in this 21st August 2020 circular, advising banks to follow the instruction related to letter and spirit. So, that is a very important document. Drawing power discussed, and this is also discussed. Now, let me take you to the another one. This is 106. Please look at this. Asset classification to be borrower wise, not facility wise. This is a very important paragraph. And all these are there in your 1st April 2022. It is not that, even though it is not given here, it is given here. Where is it? First day. It is here, 1st April. So it is borrower wise. Borrower wise. Look at this. Asset classification should be borrower wise, not facility wise. It's already there. So that's why, for your kind information. Where is it? Yes. Sorry for this. Where I am. Sorry. It is in 487. This is all facilities granted to a borrower and investment made in securities will have to be treated as NPA once any other part of the facility has become irregular. So, the catch point is the account number and the customer number. So, there is a unique customer number will be there. So, I will take you to 497 also. Look at 497. You have this. The auditor needs to ensure that each customer is tagged under one single customer ID or unique customer identification code. So, one customer may, if he is given two customer IDs, what will happen? So, he will for certain accounts it will not be treated as an NPA. Okay, so even one account becomes an NPA, so that will be given a separate customer ID. So same person will be given another customer ID, and all the other accounts will be tagged to that second customer ID. These things also can happen. So these are all. So 1/4/2022, that circular is a very important circular and highlighting all these aspects. So the NPA classification of a group entity as such does not automatically extend to other related groups. So this also has to be noted. So a group company will be there, maybe 7 companies will be there. So one company may have 7 facilities. So one facility is NPA, that company, all the other 6 facilities also is an NPA. But the NPA classification of a group entity as a does not automatically extend to other related group entities. The classification will have to be judged independently, that is at the entity level, not at the group level. So, with respect to the customer level, the one account becoming NPA, the entire customer accounts will be classified as an NPA. Very important. Okay. So, that is your para number 11.106, and It is also given in 4.9.2 of the 1st April 2022. Okay, so where am I? Sorry, I'm here. Yes. So therefore, once or any part of the facility has become irregular, except in the case of preference shares, the rest of the exposures are not required to be considered non-performing. So all facilities granted to a borrower investment made in securities will have to be treated as an NPA once or any or part of the facility has become irregular. Okay. Now, except in case of preference shares. So preference shares, sometimes the interest will not be paid. So it will not become an NPA, but it will become NPI. Okay. So that is the only point they have mentioned. So group, it is not applicable. Now let me now take you to one more aspect, but I don't know how many banks are following this, but this is also being discussed in 1/4/2022. NPA is only based on record of recovery dues in advance account. There are many other non-financial parameters also, but this is actually may look for the present IRAC norms not relevant, but this is a relevant for the coming days because I was referring to the discussion paper on introduction of ECL framework for provisioning by banks. So there, the credit risk assessment, that is future. So the present IRAC norms is backward looking, but the coming years forward, it is not only backward looking, but also majoritarily forward looking. I'll give you two minus point in the present system. So far, it is even like in cinemas also it will happen. The bad guy will turn into a good guy, and the entire society will brand him. Okay, ye to gunda tha, mawali tha, he was a bad guy. So therefore, he will continue to be a bad guy. But I was not a prompt person in repaying my loan, but now I have good cash flow. I'm making a prompt. I want to make prompt payment in future. So am I an NPA? So this is number one. Number two, I was good in the past, but now in future I will actually default because my cash flows are not good and I have actually lost money for various reasons. So that will also not show in the present IRAC norms system. So these are all two pitfalls in the present system, but that is now been addressed by Reserve Bank of India in this new model where it will be backward and forward looking. And these non-financial parameters, even though presently we have included, it has been included in the guidance note, in the days forward, it is going to be very, very important. Okay. Now, I'll now take you to, yes. How about this paragraph? Please pay your kind attention. Yes. The net worth of the guarantor, okay, or availability of securities. Is it relevant? Okay. Now, a loan has been given to, okay, an advance has been given to a borrower, 40 crores. Okay. There is a guarantor who has given a guarantee with respect to that 40 crores. Now, the net worth of the guarantor at the point of time was 50 crore. Now, after 1 year, 50 crore guarantor's net worth has gone down to 10 crore. But money advanced to the is 40 crore. Now, in this scenario, what will be the circumstance? So, income recognition is based on recoveries. Net worth of the borrower guarantor should not be taken into account for the purpose of treating an advance as NPA. So, borrower net worth also Govinda and the guarantor's net worth also gone. Okay, now what to do? Now, his account is running well, but his net worth is eroded. So, or other, except to the extent provided in para 4.2.9 of the master circular, only that exception, Otherwise, the net worth erosion of borrower or the guarantor or the security, actually, at the time of giving the security was worth 40 crore. Now the security market value has come down to 25 crore. But I have given advance 40 crore. Okay. So that exception is only given in para 4.2.9. So I'll just take you to that paragraph alone, which for your kind attention. Okay, very important point. Okay, 4.2.9. This is accounts where there is erosion in the value of security committed by the borrowers. Now, when that is major, please look at this. Erosion in the value of the security can be reckoned as significant when the realizable value of the security is less than 50% of the value assessed by the bank. So that means originally it was 40 crore, now it is 25. So from 40 it has come down below 20, then it is significant. You have to take it. Otherwise, you are not supposed to touch. So very sensitive point also has been brought out in this 1/4/2022. Similarly, the realized value of the security as assessed by the bank or approved valuers is less than 10% of the outstanding in the borrowal amount. Borrowal amount is 40. He borrowed 40 crore. Now it is only 4 crore. Now, less than 10% of the outstanding. What is 10% of 4 crore? 10% of 4 crore is only 40 lakhs. But when I borrowed, it was 40 crore. Asset value is actually from 40 crore has come down to 25 crore, even 20 crore, 10 crore. But outstanding is less. So, therefore, both these have to be considered. Very important points they have brought out in 1/4/2022. So, whether banks have considered all this, you can take one sample and you can ask for this information whether this has been considered or not, has been reviewed. Okay. So, that is why the valuation report is very significant. Okay. So, not necessarily the valuation report every 3 years has to be only increased, it can even decrease also. Please understand that these are all very practical point to actually understand. And similarly, if any guarantees are given, will I consider that for provisioning? No, I'm sorry, I'm here. I have to take you to 501. Okay, look at 501, guys. This is 501. 50. Provisioning for loans and advances. Now, of course, these percentages and all I'm not going to discuss. I'll only come to some significant point. Please look at this. Doubtful asset, in case the advance is covered by CGTSI guarantee, becomes non-performing, then no provision needs to be made towards the guaranteed portion. The same is the case with respect to the other portions also. Okay, whether it is CGT, MSC, and so many other. But I want to bring to your kind attention one very, very important point for your discussion. Okay. Now, please look at page number 506. Okay. Yes. 506. Yes. This is with respect to unhedged foreign currency exposure of the entities. Now, what is the unhedged foreign currency exposure of the? Now, bank has given loan to an exporter. Okay. An exporter has taken the loan and he has actually exported out of India. Now, he has not hedged that receivable because it is in forex. So, now what will happen if the probability, so the unhedged foreign currency exposure can increase the probability of default in times of high currency volatility. Now, he has not hedged his receivable. Now, what if there is a high volatility, ups and downs? Possibly his receivable will come down. If his receivables is coming down, then he will default. Now, whether banks have to provide here, okay, because my customer's foreign currency exposure is unhedged. Okay. The banks are required to estimate the risk of unhedged position of their borrowers as per the instruction. So, this is wherever there is a foreign branch or foreign currency. Category A, category B, and category C. Such and customers are there. So this part will be there. So therefore, whether he has taken a forward contract. Now, if he has not taken a forward contract, that will be known to the bank. If it is known to the bank, then there is an estimate. Now, I want to bring to your kind and this is very important word, estimate. So now they have given a, so this is an additional provision. In in addition to the existing provision that has been mandated, okay, make incremental provision based on this. So a likely loss, okay, is 15%. Incremental provision is 0. 15 to 30 means 0.2%. 20 BPS means 0.2%. Okay, of the standard asset you have to provide. So 0.4%, 0.6%, 0.8% you have to provide. So this is a very important. Uh, this is actually an RBI circular that was brought out on 15th January 2014, which is updated on 3rd June 2014. Okay, good. Now, so that is one part. Now, let me take you to the same is the case with your ECGC also. Advance guarantee EC. In case advance guarantee ECGC, provision should maybe only for the balance amount, not for the other. Okay. Similarly, with respect to CGT MSC and CRGFT LIH. CGT MSC is the Credit Guarantee Fund Trust for Micro and Small Enterprises and Credit Risk Guarantee Fund Trust for Low Income Housing. So, the guarantee becomes non-performing, no provision needs to be done for the guaranteed portion. Remaining portion only I have to go for the classification and provisioning. Then I'll bring to your kind attention one more interesting circular. This is this is the audited financial statement in case of bank borrowers. The tax audit has to be certified by chartered accountant. Company audit balance sheet has to be certified by a chartered accountant. And we have a criteria. Now, is there the non-auditable entities, they have to get their account certified by chartered accountants? Yes. This is based on 22nd December 1977 itself, there is a circular where the credit limit is 10 lakhs and above. Okay. They have to get their annual accounts audited by chartered accountants. But over a period of time, limit has changed. So therefore, they revised this in 2002, October 21. The certification by chartered accountants, what is the limit, will be authorized by the board to fix a suitable cutoff limit with reference to the borrowing exposures entity, over which audit will be mandated and will be done by a chartered accountant. So this is again bank to bank. The cutoff limit can vary based on the exposure. So you can even ask for the internal document or the mandate that has been given by the head office to the respective branches with respect to the cutoff limit. So, and the sample whether they have actually implemented that. Now, I'll now take you to another important. Yes. Now, please look at this paragraph. Yeah. This is your para number. Yes. Conversion, provisioning. I'll just share with you maybe one aspect here. I think page 514 I'll take. 514. Yes. Yeah. Now, I want to make one observation here. Whenever there is a restructuring, okay, I will bring to your kind attention. This is restructuring. Okay. Whenever there is a restructuring is done, actually, because of the financial difficulties, this is a concession given by the bank. So, by restructuring, it is like you go to a hospital and you come back, okay, rejuvenated. Okay. So like that, you go by again, back go to the banker, and bank will give you a restructuring plan, and based on that plan, you are called as okay. You are now become a regular account. Now, when you go through the restructuring process, there may be a default. So therefore, restructuring accounts are away from the provisioning part. So now I will bring your kind attention to the special paragraphs. Now look at this. If the borrower fails to demonstrate satisfactory performance during the monitoring period. So this monitoring period is very important. It will differ restructuring to restructuring. Certain monitoring period will be 2 years. Okay, actually in COVID pandemic period, so many accounts were restructured, and the monitoring period, maximum period is 24 months, okay, 2 years. And it falls even in this year also. So therefore, this particular branch audit, this particular bank audit period, 23-24 is very critical. Why? Because the monitoring period falls in this year. So whether they are monitored, if the borrower fails to demonstrate the satisfactory performance during the monetary period, asset classification upgrade shall be subject to implementation of a fresh restructuring, change in ownership under part B1, B2 of the circular 1st April 2022, the original circular, and lender shall make an additional provision of 15% for such accounts at the end of the review period if the satisfactory performance is not done. Okay, so that is this, and because annual there will be a review. This additional provision along with the other additional provision may be reversed as per the 1st April 2022 master circular. So if it is actually the satisfactory performance is there, so lender shall make an additional provision at the end of the review period. Okay. Now I will now bring to your kind attention the conversion of loan into equity, into funded term interest term loan, debt or equity instruments. So conversion of your debt and interest into funded interest term loan or debt or equity instruments. So actually FITL, this actually happened in pandemic period. Okay. So an act of restructuring might create new securities issued by the borrower. Okay. So which would held by the, so you can ask for how many FITL was funded interest term loan. So because interest is not paid and principal is also not paid. So interest alone, they will actually create as a funded interest term loan. So this is a restructuring process. So what to do? So now that also he doesn't pay. So this is where the problem lies. So an act of restructure, the FITL created by conversion of principal unpaid interest shall be placed in the same asset classification in which the restructured advance has been classified. Okay, so that has to be verified. Now, there are valuation, what do you call it, as the circulars that has been given. This is one latest circular. So I'll just share with you this circular. This is that circular. So look at this circular, guys. This is a master direction for classification and valuation and operation investment portfolio of commercial banks. So what is this? So whenever there are debt, quasi-debt, equity instrument acquired by lenders as part of the resolution plan, because resolution plan, debt will be there, they are not able to repay debt. So debt will be converted to equity. So they will convert the debt into equity, and instead of holding the advance, I'll only hold as the financial instruments as equity. Now, how that has to be measured in books of accounts? So normally, if it is advance, then interest I will charge, and if it is non-performing asset, interest I will not charge. But non-performing only has been converted to a debt instrument or as an equity instrument. Now, how I will measure it? So here they have given that mechanism. So I'll take you to para number 10. Then especially I'll take you to that para. This is that para. This is that. So this is para number 3. This is your para number 10. So that para number 10 gives you, this is para number 8. 9 is valuation of investments and 10 is for various instruments. If it is quoted securities, if it is unquoted, what do you call it, statutory liquid ratio securities, then debentures and bonds, it will be valued at the YTM basis. So, and then be discounted. It should be in the discounted cash flow only. If it is preference shares, zero coupon bond at carrying cost only. Similarly, if it is preference shares, again it will be discounted on YTM base. On YTM rate, you have to discount the future cash flows, and that will be the present value of that. So all these have to be valued, and and any difference between your book value and the valuation mechanism that has been given, the difference has to be charged off to the P&L account, okay, or charged back to the P&L account. So that is the valuation mechanism that has been mentioned. Of course, this part may not apply to a branch audit unless and otherwise such restructuring plans are being implemented. And of course, that particular branch only will have that assets in their balance sheet because advances was converted to these debt instruments or equity instruments. So they can't say, no, it will be handled by head office. So it will only be handled by the branch, and branch has to implement this particular circular with respect to the valuation of those instruments. Good. Now, let me now take you to one more aspect. Yes. Now, I want to bring to your kind attention one very important paragraph. This is, yeah, page 523. Especially with respect to willful defaulters and non-cooperative borrowers. That means they don't cooperate with the banker with respect to any compliances. No, what to do with them? So you have a separate um, circular with respect to them. So 22nd December 2014. Okay. So with a view to discourage the borrowers from being unreasonable and non-cooperative in their bona fide resolution and recovery effort, banks may classify such borrowers as non-cooperative borrowers after giving them due notice. Okay. So now whether they have in their bank any such non-cooperative borrowers, okay, and whether during the process of your audit you find that the process followed by banks that doesn't give them reap benefits, then you can apply this particular circular and tell them you please classify them into non-cooperative borrowers. And with the rest, once you classify, then the what do you call speedy method of converting them into non-performing asset and provisioning, all this will apply as per the 22nd November 2014, that particular circular. Okay. Then maybe I'll take another last 2 or 3 minutes to give a few pointers. MSME is one aspect which I want to discuss, and then I'll close my discussion. I'll take some questions. Okay. So now, one point I want to discuss, MSMEs. This is MSMEs. They have got a lot of. This is the May 5th, 2021. So they have got 1.0, 2.0 MSMEs. So this is 1.0. 6th August 2020 is 1.0. Okay, and 5th May 2021 is the 2.0. So they have been, that's a very big circular, and these are all some of the summary of that circular. So their aggregate exposure should not be about 25 crores, and they should be a MSME as per the new notification. GST should be registered. Then, even though they slip to NPA, they will be treated as a standard asset only. So that is what that circular is all about in substance. I'll just take few more points. Yes, especially uh, one last point, 539. Yes, actually, this part will be default, but I want your attention. This is a very big circular. Of all the circular, this circular is the biggest circular. Yes, yes. This 1st April 2022 circular, I'll just take 2022. So this with respect to Basel. Basel 3. Yes, this is Basel 3. Please look at this circular, guys. This is actually, if you take a printout of the circular, it will go for 300 page. Consolidate this master circular consolidates the 300 page document. But of course, in branch level, at headquarters level, the central auditor have to actually certify the capital adequacy, because capital adequacy is 9% and above. If it is below 9%, then license will be cancelled. So this is very, very critical certification. So especially, please look at this. This is Basel 3 and now Basel 3, sorry, 324. Look at the minimum capital requirement. This is that. Basel 3, Master Circular on Basel 3 capital requirement, 324 page document. Now, I'll just share with you this. So, RBI circular, especially with respect to certain aspects, there are so many pointers have to be discussed with respect to Basel 3 weightage. So, standard application now, as far as branch auditors are concerned, what is the weightage given by the respective assets classification? Because certain assets, the risk is high. So the moment risk is high, capital adequacy will go up. The risk is low, capital adequacy will come down. So please understand this. So therefore, I'll just share with you one or two. The restructured housing loan should be risk weighted with additional risk weightage of 25 percentage points. Okay. These are all some snippets, pointers taken from this 1st April 2022. Similarly, with a view to reflecting higher element of risk with respect to restructuring schedule either by banks in its own, the unrated standard or performing claims on corporate should be given a higher risk weightage of 125% until satisfactory performance under revised payment schedule has been established for 1 year. So, all these are actually manually keyed in this parameters, and then the weight will be applied on the what you call it as the advances and the various assets, and then you will get that bucket, and then it will multiply and you will get the total, and that's CRAR, the capital adequacy ratio. Okay, so that weightage have to be actually verified. So you need not do anything. They will bring out that printout. You take sample 1 or 2, open this particular 324 page circular, select 1, 2, and then verify with the weights which has been given, whether it is appropriate or not. That's all. So all these are computerized, and therefore the need for verification, manual verification is less. Only we have to ensure whether the data keyed in, whether it is a traditional data, historic data, or whether the data has been an updated data with respect to the various circulars. So that is the catch we need to do. Then, of course, the last part of the thing is recovery. Yes. Of course, once it has become an NPA, recovery. You have 4 types of recovery. Only surface recovery, RDDB recovery, Lok Adalat recovery, and IBC recovery. So that is a separate process. It goes to the asset reconstruction management branch. So from the books of branch, it will go to the ARM branch. So ARM branch will take care of. So what is the receivable, what is recovered, and the balance they may be writing it off. So that is the ARM branch lookout. So guys, I'm sure I have covered to the extent possible the major aspects. I will now be open for any questions. Let me see whether any queries are already posted. I think, yeah, in the chat, some questions are posted. A seminar. Yes. How to get the attachments of yesterday's presentation. So I think SARC will send it. As L. Santana Raman is asking one question. As IRAC automation is centralized at the IT department of the bank, whether management or uh, central auditor certification or representation possible and would help SBS, please. IRAC automation is centralized at the IT department. Now, let it happen, but as a branch auditor, the activity is taking place only at the branch. So, whether the parameters that has been set with respect to the classification, so whether it is right with respect to the activity of the borrower, that only has to be verified and confirmed. So everything is automated, we cannot keep quiet. And whether management or SCA certification representation possible and would help SBS. So that management representation letter you can get with respect to certain aspects, but not with respect to this. How do we identify if manual intervention is in asset classification? Yeah, exception report. I already mentioned this. Prakash Singhi is asking this question. How do we identify if manual intervention as a classification? So, exception report. Nagarajan is asking one question. If manual intervention is there, should we mention in LFAR or qualifier? But no. Why manual intervention has taken place? What is the reason to do a manual intervention for the various asset classification? Because everything is automated. So maybe I gave an example. So upgradation, downgradation. So for upgradation, if the company or the borrower has actually done well, okay. So why he should be in the substandard? You will let him be upgraded to standard. So sometimes system may not have that upgradation. System itself will give a rating. Okay, green rating, yellow rating, red rating. So that green rating, if it is there based on the cash flows, so then the auto upgradation will take place. Whether auto upgradation is there and what is the criteria, that also you can select. Or manual intervention is there. Then we have Mr. V. Janaki Raman. Jan, for today's meeting, I did not receive meeting link. With the help of other profile, I am able to attend. Okay, right. So this is not a query. Okay, so yeah, Mr. Santosh Patil. I have also not linked. So these are all with respect to link questions. Okay, Santosh Patil has given the link for today's exposure tab. Thank you very much. So then we have any other question? Nagarajan is asking one more question. Should interest on agree term loans also to be charged? Should interest on agreed term loan also to be charged on crop season basis? Actually, they have not distinguished. So actually, uh, working capital loan is there and term loan is there, and there is no distinction. Of course, whether it is term loan for implements, term loan for a tractor, whatever it is, ultimately it is only based on you have to use it for agri. and the cash flows only will come from the agriculture. So there is no such distinction as far as the circular is concerned with respect to term loan and working capital loan. So that is a good question by Mr. Nagarajan. Then Joseph Narasimha Reddy. Pranita is asking a question. Will agricultural income generation alone be considered as a security in case of rural banking loans? Okay, so this is it's a good question. So well, that is why I was asking you to one particular point I was referring. The credit policy. The credit policy will be very detailed. It is not one page, two-page document. Credit policy will be some 30-page, 40-page document minimum. So there, for agricultural loan, they will have a credit policy. So what should be the security? Should the security be income alone should be a security? If it is income alone is security, then it is not a security. It is an unsecured loan only. So should there be a collateral? And what is that collateral? So that is a credit policy. So please go through that credit policy. So the entire banking business cannot be defined by RBI. RBI can only regulate to some extent, but the business model, for example, if I am a private sector bank, I am a small finance bank, I am actually a public sector bank. The small finance banks criteria for agri loan with respect to and with the public sector banks criteria need not be same. Some can be aggressive also. So therefore, this can be a criteria, but if only cash generation is the criteria, it is not a security. Then Ramakrishna Iyer is asking a question. In consortium lending, how to ascertain that the lead banker is ceding the dues of the other participating banks share properly? Only communication. So we need to have proper communication from the consortium bank. What is the cash flow? What is the dues with respect to the other co-bankers or member banks. So we need to get a confirmation, proper confirmation from the consortium bank, so that proper accounting can be done based on that confirmation. Again, Mr. Ramakrishna Iyer Dharmasankaran is asking one more question. Trailing on my earlier query on consortium lending, how to ascertain that the bank of which I am SBA is the participating bank? There is some gray area in classification as NPA. You will have the agreement and that consortium agreement clause will give the clarity with respect to this. So they can't give an answer saying that no, head office only has this consortium agreement. Branch should have a copy at least. So that will give you clarity with respect to the consortium lending. Then again, Mr. Ramakrishna here is having another question. There has been lot of newspaper ads for change of name of individual these days, correct? Is there any safety net for banks to preempt any frauds? Can you throw some light? Aadhaar is the only connect. Whether how many PAN and what is the KYC and how many borrowers, customers they have given Aadhaar as their KYC. And nowadays, based on Aadhaar only, bank account can be opened. So that is how the system has now come. So only for the old accounts, whether the Aadhaar has been there or not, and whether the Aadhaar has been verified. So getting the Aadhaar number alone is not sufficient, whether Aadhaar has been verified. Can you explain again the RBI circular on LEI applicability? Actually, LEI, it is actually legal entity identifier. This is applicable from 2017. Every borrower who has borrowed 5 crore and above, they have to get this legal entity identifier from the subsidiary of the CCIL, the Clearing Corporation of India Limited. One subsidiary has been formed. That is a legal entity identifier India Limited. So they will only give that unique number. They will only have the database. So that's a very important applicability with respect to the borrower, because big borrowers, because above 5 crore means stock audit mandatory. So that is why the number is very, they are all big borrowers. So they will be monitored. So very closely, a lot of reports will come to them. So back end, they will be analyzing these people. And the days are not far off where the credit score will become sacrosanct. I repeat, credit score will become sacrosanct. Very, very important. Today, we are not giving importance to credit score at all. Credit score, any action by the borrower will impact his credit score. Even non-payment of tax, delay in payment of tax, non-payment of GST, delay in payment, non-responding to the notices by the government. This will have an impact on his credit score. And once the credit score impacts, it will have an impact on his borrowing, lending, interest rates and all. Today, that connect is missing. That connect will be coming. So that is why this is the first step towards legal entity identifier and all. They'll connect legal entity identifier number to GST, income tax, PAN, in everything they'll connect. So, and that will have an impact. Anywhere, any default, that will have an impact on his borrowings. So, yeah. So sometimes Nagarajan's question is, sometimes a borrower may have loan account in another branch of same town. How to check NPA since borrower wise? Sometimes a borrower may have a loan account in another branch of same town, same bank. Okay. So that's a good question. How to check NPA since borrower wise? Now, as far as that branch is concerned, you will have a customer ID. Okay. So that customer ID, you can ask for from the, maybe if it is a sensitive customer, you can ask whether how many bank accounts are being opened in the name, accounts have been opened in the name of this customer ID with respect to that bank. So SOL wise, service outlet wise, you will get in this SOL, this account has been opened. So that is why that current account, OD account, CC account, opening in other bank, the restriction came by RBI circular. So Nagarajan, your question is, I really appreciate that question. Thank you very much. Again, Mr. Ramakrishna, here's one more question is, most of the branches are unaware of the audit of financial statement by CA funded limit over 25 lakhs. Okay, of course, bank to bank, this limit will change because of the board of directors may give a different limit as mandated, as most of the fellow professional agree. I agree, sir. I agree. I also agree. Because as I told you that 1977 RBI circular, then it has been updated in 2002. Board of directors can change the limit. So now these things have to be, we need to ask for this because headquarters will have, and branch also will have this in their file, all the directions which they have got from head office. So which we need to ask and get it. Otherwise, you can even ask the head office to share these information. Again, Mr. Ramakrishna, here one more question. Hence, the branches are not having such audit report in the prescribed format in the record. Agreed. Prakash Singh's question, any change in LFAR compared to previous year? No change. 2020 only they have changed the format. Then we have Mr. B. Ravi Kumar's question. After NPA, is there any need to verify further? Oh, good. Okay. So many are. So my role is only to IRAC and notifications, circulars, and other things. You can go for a lot of reports. Like I was giving you the first circular. What is the first circular I was referring to? That is cyber security framework in banks. Okay, so many are there. You can take the MIS reports. You can take the whether any data integrity is there, security is there. You can even verify whether any login has been done on a Sunday or on a holiday, and whether any customer complaints book is there, and whether customer complaint book has been taken seriously. Many things you can do it. So I've just shared my role today with respect to IRAC and NPA. That's all. Okay. So I think the Suresh Imda Bhutani's Download draft ICA guidance note on bank audit. It's already been shared in the link in the before. Then, okay. Sir, how to pull an exception report in banks? Okay, BANCS. So you can do it if they are giving you a login because auditor login will be there. You can go to the auditor login and in the report section you can pull out the various exception reports that is available, or you can even send a request to the data center and asking what are all the exception reports you want, annual reports or monthly reports or customer based reports or like that you can ask. So either you yourself can pull it out, Siddharth, or you can request the data center. Naveen Kumar. Bank has given loan to non-individual borrower exceeding 5 crore, but within 25 crore. When does LE apply? It's already applicable. So okay, Prakash Singhi. Can we get quick snapshot for bank audit to familiarize ourselves with key circular? As we discussed, there are lengthy circular running to 300, 400 pages. It will be very difficult to go through all this considering limitation of time. I really appreciate Prakash Singhi because this subject is a big subject and banking system is the I'll say the fulcrum, the backbone of a country. And therefore, audit of banks is a very complicated audit. So I will request Prakash Singhi to go through this entire book of guidance note given by the uh, institute. So even though the various circulars what I showed runs for some tons of pages, so this guidance note is a summary of all these things they have put it, and this is the biggest guidance note of all the book. Okay, the dada of all the guidance note is guidance note on audit of banks. Aram say, please go through this book. You have another 15-20 days to start your audit. So therefore, each day you can at least devote 20-30 pages. I'm sure it is worthwhile reading this book, my dear friend. Please read. Okay. So whatever may be snap, so many presentations are there. Even today, I already did a presentation for your information. I'll just share you the presentation also. See, please look at this. This is my presentation. This is my presentation. So, but this is my presentation. Please, 9th November 2021. I also given the link here. So then willful default, I have given the link. Then 14th September, I have given the link. But this reading from the horse mouth is nothing like that. So therefore, guys, I'm sorry. So that is the best way of. I'm sorry, I just missed the question. Prakash Singhi, yes. Usha Nandini as one more. Can a person engage in other activities and also has agriculture land and takes gold loan against agriculture? Can these bank provide agriculture loan to such person? Good question. That is why Kisan credit card, the person who is having Kisan credit card, Gopal Krishna Raju, I am from Chennai. I own agricultural land in Tanjavur. Am I an agriculturist? No, I should have Kisan credit card. So Kisan credit card holder is only Kisan. Kisan means farmer. So this is not acceptable. So we are not provided for exception report from branch. They are telling that no such kind of no. Radhika's question is you are wrong. So exception report, if you have to pull it out. So if you can't do it, send an email to the data center. Copy to the central auditor. These are the reports I need. Please support. Next half an hour, 1 hour, you will get the exception report. Okay. Either if they give you the login, they can do it. All these are they are fooling around. Okay, nothing like that. And Satyanarayanan's question: what is the criteria for classifying MSME advances as NPA? Is there any concession? I told you that 2020 1.0 they have brought one RBI circular And 5th May 2021, they have brought one more circular, that is 2.0. And if the MSME has applied for restructuring, provided they satisfy the criteria. What is the criteria they have to satisfy? As of 28th of February 2020, they should be a standard asset. If as of 28th of February 2020, they are a standard asset and they have slipped during the pandemic time or later, then they can actually they can avail that, what do you call this, restructuring. Otherwise, they are not eligible for restructuring. So just kindly go through that 1.2 or 2.2. Then, so I'm sure uh, any questions? I think I've covered all questions. Any other questions are there? Welcome. Yes, Mr. I think two more questions are there. Sir, exception reports are generated every day in bank. Sheila Sriram is asking. So whether we have to go through it for the whole year? No, 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 no. That exception report is only for the concurrent auditors. As far as the exception reports, I'll give you an example. So I was giving one or two cases. For example, whether the asset classification has been done by manual intervention. What is the exception report? I'll give an example too. Whether there was any login on a holiday, on a bank holiday. Okay, you identify which are all the bank holidays, whether any login has been done from the branch employee's login ID. So that exception report will come. Number three, whether ad hoc loan limit, has been that outstanding balance has gone above the approved ad hoc limit. So in how many days it has gone above that limit? So you can ask for an exception report. Now based on these exception report, your audit queries will increase. So Sheila Sriram, you can get this. One more question. Most of the branches do not have audit model. How do we verify audit trail? No problem. If they are not giving, there is nothing called audit module is not there. Every CBS has an audit module. So they are only fooling us. Number one. Number two, if they are not providing, record that in your audit report and inform that to the central auditor. Number three, you get the what do you call it as the exception reports or whatever reports you want from the data center. You write an email to the data center. So this is the SOL number. So service outlet number. For this service outlet number, these are all the reports I need for whole year. So please send me one copy to the manager, one copy to the auditor. So the next moment the report will come and open that text file, convert that to Excel, do all the analysis. Next 10-15 minutes, you have the youngsters from your office, they will do all these analysis in just 5-10 minutes. Then Prakash Singh is another. Sometimes accounts are restructured multiple times. I had an education loan. Just to ensure that it don't fall under NPA. What shall be the auditor's view? Shall we raise an MOC? No, no, no. See, anything which is restructured, it has to go only as per the RBI circular, RBI's mandate. So if they are doing it multiple times, what are the dates it was restructured? 1, 2, 3, 4. Now tell them why restructuring 1 was done, what is the mandate? Restructuring 2, why it was done? Second restructuring is not permitted once the restructuring is done. This is also RBI mandate only. So therefore, if they are doing it, on what basis they are doing restructuring? So that is an exception. So you can bring it. MOC is only when the provisioning is not done and you provide further. So actually, once it is not, it is a regular, and then it should be actually provided, then MOC can come. Okay, so these are all you have to find out whether the classification is right or wrong. If it is wrong, then you can proceed for the MOC. Oh, Mr. Ramakrishna Iyer, another question is there. Most of the branches are unaware of the. Okay, that point we have discussed. Okay, thank you. Every time we go, Prakash Singh's question. Every time we go for bank audit, when you require report, understand the bank official are not aware to pull the report. Can entire process be standardized from HO, which clear provide data requirement along with the way to pull the report? This approach will really be helpful. Thank you. Jayam Srinivas Kumar. All the self-help group loans are shown as secured loans. There is no primary or collateral security. So, to how far it is correct? Now, unless and otherwise it is guaranteed by any scheme, SHG loans are not secured. SHG loans, unless and there is a collateral to it. So, if there is no collateral, no guarantee given by state government or central government, where is security? It is unsecured. But it is priority because weaker section. No, there is a priority. It will come in PSL. So, there is one circular with respect to PSL, priority sector lending. That circular is there. So, that circular you have to apply whether the self-help group weaker sections and all, they come under that percentage is there 18% or 7.5%. So whether they are funded to that extent. So that is not secure, that is unsecured only. Then Usha Nandini, another one question. There is a scenario in the branch where few accounts of the branch has not received the repayment of installment or not served with sufficient interest properly, but the branch states that these accounts are given moratorium without the borrower's request for moratorium or proper documentation. As auditors, how to act on this situation? They state that accounts are given moratorium without borrower's request. Moratorium cannot be given without the written request of the borrower. If without the written request of the borrower, if moratorium is given, then it has to be revised. Please note down. Okay. Gone. Then we have Sivakumar. Sir, provisioning is done at branch level or HO level. If done at HO, how to verify the provisioning? It is not done at HO level. It is automated asset classification, automated the income recognition. So therefore, that automation only has to be verified at the branch level. So automation is done at the HO level. It doesn't mean that it is done at HO level. It is done for all the bank, all the branches. Satyanarayanan, MSME customer did not pay GST dues regularly and the GST is not in an active status. But the branch restructured the advances based on 2020-2021 circular, that is 1.0, 2.0, and classify the advances standard. This is pandemic, so you cannot say. One of the conditions to register is that GST registration should be live. GST registered, it is not live. Can you agree with the classification standard? There is no, the concept, the circular says he should be registered under GST. That's all. Live word is not there, please. Okay. Satyanarayana Garlabaddi, branches are informing SHG loans as classified as secure loan as RBI guidelines. Okay, now it is not. Where is it written? You please show me. You tell me the para number, what is it, circular number and all, date and all. I just know showed so many circular. You show me the para number, I'll agree. For my understanding, limited knowledge, what I have, it is SHG loans are unsecured. Dolly D. Pandya, mostly asset classification was the issue regarding put to use date. Branch tells that approval for HO pending, but assets are actually used in branch. No, it cannot be like that. Each mostly asset capitalization was the issue regarding put to use date. Branch tells that approval for HO pending, but assets are actually used by branch. Okay, so here you can take based on the facts of the, because facts are before you. So based on the facts, you can recommend the proper accounting. Okay. Sure. So thank you very much, Secretary Arun Ji. So I'll just hand over the session back to the Secretary CAAV Arun.
Thank you, sir. Thank you for your wonderful presentation. So I think with this we are coming to end of the second day series of bank audit series. So we'll meet in tomorrow evening 5 o'clock, same time for the third day session. Thank you, sir. Thank you for your